What is the most significant financial event this week? The answer: the U.S. Federal Reserve's interest rate decision. This decision, slated for March 20, 2024, has the potential to ripple across not just the American economy, but the global financial markets as well. Financial pundits are pointing towards an anticipated interest rate hike, a move primarily aimed at reining in inflation, which has hit a multi-decade peak in the U.S. So, the question remains, by how much will they raise the rates? The Fed has several options on the table. As the date draws closer, financial experts are debating the magnitude of the anticipated interest rate hike. The general consensus leans toward a quarter-point increase in the federal funds rate. This modest adjustment is seen as a measured response to the inflationary pressures that have been building up. However, don't discount the possibility of a more aggressive half-point hike. This scenario could unfold if recent inflation data points to a more severe situation than previously expected. The Federal Reserve might also consider the overall economic condition, including employment rates and GDP growth, before making this decision. In this game of financial chess, every move is calculated and deliberate. The Fed's decision will not only reflect its assessment of the current economic landscape, but also its strategy for the future. Beyond the immediate rate change, investors will be keenly listening to the Fed's forward guidance. After all, anticipation is half the game in the world of finance. The financial markets are likely to react strongly to the Fed's decision. A larger-than-expected rate hike could lead to a sell-off in stocks, while a smaller hike or a dovish stance from the Fed could boost stock prices. Let's not forget, the US dollar's exchange rate with other currencies could also see some action based on the Fed's pronouncements. Now, why is this important, you ask? Well, the Fed's interest rate decisions have a domino effect on borrowing costs throughout the economy. In simpler terms, higher interest rates make it more expensive for businesses and consumers to borrow money. This can potentially put the brakes on economic growth, making the Fed's decision a crucial event to keep a tab on. Higher interest rates make it more expensive for businesses and consumers to borrow money, potentially slowing down economic growth. So, what should we be watching for on March 20th? First off, keep an eye out for the official announcement from the Federal Open Market Committee. This will confirm whether or not there's been a rate hike, and if so, by how much. But the intrigue doesn't end there. The subsequent press conference by Fed Chair Jerome Powell may be just as illuminating. Listen closely as he explains the committee's reasoning behind their decision. What factors did they consider? What do they see as the economic outlook moving forward? This could give us valuable insights into their policy direction for the rest of the year. By following these key points, you'll gain a deeper understanding of the upcoming Fed decision and its potential impact on the financial markets.